Hello, everyone. Thank you for joining us at this Your Overseas Home webinar, where we're talking about your money and your move to Portugal, specifically looking at tax and pensions. My name is Christopher Nye, Senior Editor at Your Overseas Home and Portugal Property Guides. And today we are chatting with Scott Newport from Chase Buchanan, who are a wealth management firm that we have worked with very well and we highly recommend. It's great to have you with us, whether you're watching us live or whether you're catching up on demand. We've got 30 minutes and we're going to start with a presentation from Scott. And if you have any questions, please type your query into the questions tab on the right-hand side of the screen, and I will endeavour to ask Scott at the end. And if you need a reminder of anything that we discussed today, or you want to share this with family or friends, you can watch a replay available on Your Overseas Home website to watch at your leisure. So, Scott, if you could just start off by giving us a quick introduction to Chase Buchanan and how you can help our viewers today, and then we'll go on to your presentation.
Perfect. Thank you very much, Christopher. I'll move through some of the slides as we go. Some of these will be self-explanatory, but the majority I will give a more detailed explanation on. So what we were looking to do today, really, here's an agenda. I'm going to give you an overview of Chase Buchanan, who we are, more to the point, how we're regulated, what locations we work in, what services we offer our clients. We're also going to look at the actual financial planning team, of which I am just one member. We're also going to briefly discuss the qualifications that our team in Portugal have. More importantly, and relevant to most of you today, will be moving to Portugal. So again, we're going to look at the financial and tax essentials, what taxes you might pay on property purchase, what actions you need to take in terms of preparing to leave the UK, any additional financial planning considerations regarding that. Then we'll get into NHR, which I'm sure you've all heard of, but non-habitual residency and the respective tax rates, what considerations those tax rates might have on your pensions. Then also what really you have to do once you arrive in Portugal, because it's sadly not just arrive, pull out the suntan lotion and move to the beach. There's a certain tick list of items you will need to go through when leaving the UK, but that's something we will go through. So moving on, in terms of our group structure, you'll see from this we're quite a complicated company in terms of how we're structured. If you look on the left-hand side, you'll see Chase Buchanan Private Wealth Management. The reason that we have that set up in Cyprus, I mean, some of you may recognize their CISEC regulation. That is the regulator in Cyprus. It shows even our regulation number. But you'll also see to the next line there, Chase Buchanan Insurance Services. Now you may wonder, well, why do you have private wealth management and insurance services? That is simply because depending upon the individual product structure that our clients need, it may require a slightly different license. So we have private wealth management, we have insurance services. The reason, as I say, behind that is because every single bespoke client solution that we come up with is exactly that. It is bespoke. Some people will need an investment product, let's say, in an insurance wrapper. Now that would have various tax benefits for individuals, but only certain individuals. But in case, again, you're wondering why, that is why the difference. Now we also have, you'll see in the middle column there, what's called an FCA license. So the Financial Conduct Authority based in the UK. That is technically what we call a run-off license. So we're not doing new business in the UK, but when we're talking to clients who we've helped in the past, we have to keep that license going for a set period of time so that that advice is still protected by the FCA. You'll see on the fourth column there, we have our tax consultancy based in the UK, but working with consultants in the Isle of Man. Now, this is particularly relevant for, as you'll see on the bottom line, global cross-border tax advice, because we're dealing with clients in lots and lots of different areas. So the tax situations can get quite complicated. Now, the reason we effectively subcontract this to our Isle of Man setup is because we make sure we get things right, because you don't want to make mistakes when it comes to taxation. Now, finally, you'll see on the right-hand side there, Chase Buchanan USA. We're one of very few companies who are licensed not only with a MiFID license in Europe, but also we have regulation in the US. Now, one of our senior members of staff is actually a US citizen, so he holds that license, so we can actually deal with Americans moving to Europe or elsewhere around the globe. So again, that hopefully gives you a flavour of the fact that we're a highly regulated organisation. So I'll move on to the next slide. Where are we based? And this is a small sample. I mean, you can see there, Belgium, Canada, Portugal, obviously, Spain, Cyprus, Malta, and our admin setup is in the UK. That said, that doesn't prevent us from dealing with clients pretty much anywhere on the globe. Just last month, I was traveling to see clients in Germany. Now, predominantly today, obviously, we're looking at Portugal, but hopefully, again, this gives you a feel for the fact that we are, working with people in lots of different areas. I mean, our roots as a company were established over 20 years ago. What you may have found when looking at, your potential moves is that once the Brexit vote came along, people had to make changes. Your UK-based advisor will not, unless they have a MiFID license, be able to advise you in Portugal. That's where we would come in. This is something that a lot of people have fallen foul of. Very recently, I had a client who had been working with an advisor in the UK, could no longer work with them. We had to get involved. We took over their arrangements and made them compliant in Portugal because, and we'll come on to this in a little bit, but there are certain investment products that, whilst they might be great in the UK, will not be good for you in Portugal. But again, we'll come on to that in a little more detail further on. So scrolling again through, you may or may not have seen this on our website if you've looked there, the little book of investment scams. We're actually the only approved advisory company who've worked with the UK Metropolitan Police on how to fight cybercrime. So they came to us and asked us, well, how can we put something together that people can get access to data to help them spot things that may actually, cost them money and shouldn't. So we came up with this booklet. And like I say, the fact that you could go on the Metropolitan Police website, look up investment scams, look at trusted, and you will find us and this booklet that we devised with the Met. Hopefully that will give you some confidence that we are a reputable company. Moving on again. What do we actually do for people? Because at the end of the day, that's why we're here. Our service is really, as the sentence there says, is helping our clients manage their wealth so that you can enjoy your time. And again, if Portugal is for retirement, enjoy the life that you've planned for. How do we go about that? It's financial planning. Some people will call it wealth management, but part of that involves cash flow forecasting. Now, when we're looking at client scenarios, we have to look at a whole plethora of financial arrangements. That could be UK pensions, it could even be Irish pensions, and how best to structure those pensions if you're no longer living in the UK. That could be SIPs, QROPs, IORPs. IORPs is specific to Ireland. If we're talking about managing money, then we're looking at portfolio reviews and investment management. The personal tax planning, we've already touched on briefly. We do have an advisory set up in the Isle of Man, which again would help people look at how best to structure not only their personal tax affairs, but also their wealth management, their investments, their pensions, to make sure we limit taxation. You'll see in the brackets there, UK inheritance tax mitigation. That's a particularly sensitive subject because As a wise person once said, there's only two things in life that we know are certainties. We're going to die and we don't know when. There was somebody that once said, the third thing is, at some point you're going to pay some tax. Well, again, what we want to do is limit that tax. Now, inheritance tax, as I say, is a particularly tricky one because a lot of people believe if they leave the UK, they're no longer liable for UK inheritance tax. That's not actually the case. We'll go into specifics again as we move through, but something to consider. Retirement planning, and you might look at that and think, well, is that not pension planning? Well, yes, but how best to use that money in retirement? Again, if people have moved to Portugal and they're still working, we may be looking at regular savings and school fee planning. There's also, again, linking it into the fact that we know at some point we are all going to die. We might have to look at life, maybe even health or critical illness insurance. We can put people in touch with help for mortgages. US connected persons we talked about, that's again something we can look at. And corporate services. Some of this we would do via our sort of pool of trusted professional advisors. Some of that we will do in-house. But hopefully that gives you a flavour of the things we can look at for you. How do we go about our financial planning process? Now, personally, I've been in this industry a very, very long time, 32 years. You can tell by the lines on the face, I'm sure. But if you look at step one there, gathering client information. The best analogy I can give is if you took your car in for a service and they didn't look at what the car was or what was going on with the engine, you wouldn't get a very good service. Well, again, what we need to do is look at exactly where are you financially before we can even think about advising you. What we then look at is, well, what do you want us to do for you? What are your financial goals? What are your long-term objectives? If we know that and we know where you are currently, we can then look at step three, which is analysing that financial situation. And some of that will involve recommendations and discussions with you, because we very much want this to be a two-way street, which leads us into step four, which is developing a financial plan, not only currently, but moving forward. And that's something that, you know, when we present it to you, we very much want to work with you. We want your feedback. We want your thoughts. If there's things you really like in it and things you don't like, tell us, because the only way this works is if it's a two-way street. Step five is obviously implementing the plan. That's actually taking the steps to make sure that you do what is best for your personal financial affairs. My 32 years in this industry have taught me, though, the most important step of all is step six. There's a model in this industry where people will advise you, and I'm using the word advice in inverted commas, because what they will really do is sell you something, and then they abandon you. You never hear from them again. Most of my time with my clients is spent actually monitoring and reviewing where they are, and are we still on track? And if not, do we need to make changes? Or maybe they've had life changes and we need to adapt. But monitoring and reviewing the financial plan is absolutely the most important part of this. That's where we are a little different, because we are not just going to sell you something and abandon you. We want to work with you in the long term. So hopefully that gives you some reassurance. Moving on to the next, I apologize for the next slide because sadly we're not the best looking team. But this gives you a flavour for just who you'd be working with. I mean, you can see there the slides cover it. You know, we've worked many places across Europe, North America, the Middle East, Asia. I personally used to work in Bermuda, but also looking at lots of different aspects. So if somebody said, I've got a particular query regarding a Bermuda client, one of my colleagues here may come to me because I worked in Bermuda for 17 years. So you benefit from that pool of knowledge. It's not just one person and a one-man band. And this is just the Portugal office. I've shown you again, we have offices in many different jurisdictions. What are the considerations for you? Because this is what we're really here for. Why moving from the UK? Well, there's certain things we need to look at. Portugal has no wealth tax, first of all. However, as UK nationals, you've still got the consideration of UK inheritance tax. We've touched on that already. Like we said earlier, since Brexit, everything has changed. That freedom of movement has now gone. The Schengen 90-day rule means no visa is required, but it does mean we've got the 90-day rule, which is 90 days in any of the last 180. I'm sure you've all been doing this already, but do your research online, whether that's attending webinars like today or just good old-fashioned investor Googling, for want of a better expression. And then again, if you haven't already, do scouting trips. Actually come to the areas. Look at where you want to live. Look at where you want to spend time. Is the area everything you thought it was? Again, do those trips. Now, in terms of contacting local agents, lawyers, accountancy services, if that is something you need our help with, we can help. We have a network of professional advisors that we're more than happy to introduce our clients to. Ultimately, what you want to be doing now is finding a property, because at the end of the day, that's why it's your overseas home. Once you've found the property, then what you need to do in terms of the move is get what's called a NIF, which is the tax identification number in Portugal. Alongside that, you would then need to get a Portuguese bank account set up, all of which I'm sure are obvious things, but again, we will try and make sure, if we're working with people, that none of these aspects are missed. But these are all things you need to get sorted sooner rather than later. When you purchase a property in Portugal, don't just think, okay, this property is 400,000, let's say. That's what I'm paying. Now, there will be some additional taxes on top, which I'm sure some of you will have realised. Again, we've listed here most of the fees. I'm not going to bore you by going through them all one by one, but if you're looking at an average of about 6% on top of the purchase price, all things I'm sure you've considered, but this is just to remind you. In terms of preparing to leave the UK, the consideration as to whether to sell your property or rent it out, there are tax implications there, especially regarding inheritance tax. So let's say you decide you're going to move to Portugal, and Portugal is going to be your forever home, but you keep a property in the UK to rent it out. That property, because it exists in the UK, mean you will not lose your UK domicility, and you will always be liable for UK inheritance tax. That's a major consideration. But again, one of the things you need to look at is, do we sell the property, do we rent it out? You then need to look at the various residency visas. And most of these depend upon whether you are going to retire to Portugal or whether you're going to carry on working. Again, I'm not going to go into too much detail now because it is very, very specific and individual. Apply for those visas when you're in the UK, though, because it will probably involve a visit to the embassy. And again, you don't want to have already moved to Portugal and then be travelling backwards and forwards. You're looking at on average 2 to 3 months, depending upon the type of visa. Once you've got that visa, you then get an initial 120-day entry card. You then have a sort of 6-month timetable, which gives you, time to sort out the removal companies, work out, well, if we've got this lump of money that we're going to use to buy the property, how do we convert that to euros? And again, we can help put you in touch. We as a company called Smart Currency, very, very, very efficient at making sure you get the right conversion rate. But again, these are all considerations you need to have. What are the financial planning considerations? Well, UK capital gains tax, because again, depending upon the timing of sale of UK assets, will impact on CGT, capital gains tax. Pensions are particularly important. We'll come on to that in a little more detail. But also, again, some of you may think, well, we've got, let's say, 200,000 sitting in ISAs, PEPs, offshore bonds, maybe in the Isle of Man, maybe in Jersey or Guernsey. None of those are compliant as far as the Portuguese tax authorities are concerned. So you could have, as I say, 200,000, it could be 2 million sitting in ISAs, PEPs and bonds that are all offshore as regards to the bonds. The ISAs and PEPs, nice and tax-free in the UK. They're not going to be treated the same way in Portugal. In fact, there is the nightmare scenario that if somebody had, as I said, let's pick a figure, let's say 500,000 sitting in ISAs and PEPs, the Portuguese authorities could, if they wanted to, actually go back and look at when you first invested and start taxation from that point. So that's a massive consideration. Something we absolutely would have to look at. UK state pension, that can actually be paid gross to you in Portugal. UK wills are going to be needed. You will probably need a Portuguese will alongside that. But that again is just making sure that come the fateful day when you shuffle off the mortal coil, your family are not left in the lurch. But these are all important considerations. Moving on. NHR, non-habitual residency. So what are the tax rates? Now again, on some of these slides, but this one in particular, I'm sure some of you will be quite interested. So pensions, 10%, unless they're taxed at source. And the reason I say unless they're taxed at source is most government pensions, so let's say teachers, police, fire, they will be taxed at source. Others, that's where we can get clever. So we can structure the pensions into an offshore setup and the withdrawals would only be taxed at 10%. Foreign source dividends, 0. That's as, you know, if there's a double taxation agreement and tax has already been paid at source, you're not going to get taxed twice. Rental income is going to be 0. Royalties are also going to be 0. Now again, any of you who are working in Portugal rather than just retiring, earnings from work that you actually undertake in Portugal, that would be taxed at 20%. But that again is pretty good because the maximum marginal rate in Portugal can be as high as 48%. So if we can limit that to 20, again, we're in a good situation. Now the NHR setup lasts for 10 years. Beyond NHR, that's a whole other consideration, but we'll cross that bridge as and when we come to it. But that hopefully gives you a flavour for just how attractive, let's say, the tax rates are during NHR. Pension considerations, I said we would come back to this. So pensions, yeah, during NHR are going to get taxed at 10%, but this is one major consideration. Pension commencement lump sum, as it used to be called tax-free cash. Let's say you've got somebody who's got $1 million sitting in pension. In the UK, you can take 25% of that with no tax to pay. Pension commencement lump sum is not tax-free in Portugal. So again, if we were sat down talking to you and you say, well, we've got this £1 million pension scheme, we will be urging you to take the pension commencement lump sum before you move. Now, if you don't look at it before you've moved, there's nothing we can do, because if you're already resident in Portugal, it's too late. We'll then look at QROPs and SIPs, so self-invested personal pensions. I mean, international SIPs, the benefits can be huge for you, because again, and I'm going to use extreme example, we could have somebody who decides they're going to, with their international pension, draw 10% of it per year. Now, bear in mind that NHR is a 10-year tax arrangement. If they're going to draw 10% of it per year and only pay 10% tax, remember, and they're going to do that for 10 years, they've withdrawn the whole pension fund in a 10-year period and only paid 10% tax on the whole thing. That's quite attractive to most people. Part of what we can do as well is look at consolidation of pension funds. Most of us over our careers have probably accumulated lots of different pensions. That's something we can look at. But then moving forward with it is how do we effectively manage those pensions? That is via our portfolio management service. Now, currency planning, again, that is massively bespoke, because some people are going to want money in sterling, some are going to want it in euro, we'll come across people who want it in dollar. That is very much down to our discussion with you and how best to structure it. When you arrive in Portugal, well, one of the first things you're going to want to do is meet the professionals you've been dealing with. Now, hopefully that's me or one of my colleagues and other advisors that we put you in touch with. That could be lawyers, that could be accountants. Once you're here, that's when you start the process of applying for your NHR, your non-habitual residency. You cannot do it before you get here. You'll also want to look at getting either private health insurance or your state medical card. And then, and I referenced this earlier, then we apply the suntan lotion and start enjoying time. Because ultimately, that's why we're here. The tick list items, and again, we mentioned this right at the start. When you leave the UK, and this is imperative, you need to apply for what's called a UK P85. That tells HMRC that you're no longer in the UK. In terms of double taxation, that can have massive benefits as well. How we structure those investments for you that we've already talked about typically would be via a Portuguese compliant portfolio bond. Now, again, the taxation of that versus a blacklisted country. I mentioned earlier, it could be Jersey, Guernsey, the Isle of Man. The tax rates on something like that can be as high as 58% because it's blacklisted. We don't want to put you into something like that. So anything we set up for you would be Portuguese compliant. Again, if you're going to be a UK non-resident landlord, well, how are you going to structure that? Is that going to be a full-time job? Well, that's again something we will help with. UK driving license, yes, you would need to swap. If you're under 60, you don't need to. The UK one will still be okay. Statutory residence test, that's where we need to take care in terms of how many days you're spending in each country. UK will is something we've talked about, and the fact that I would recommend you have a Portuguese will alongside. Potentially, UK lasting power of attorney. Unfortunately, the time comes to most of us where we can't take care of ourselves anymore. If family and friends want to help with that, that's where a UK lasting power of attorney can come into play. Cars. I mean, that's something that, again, most of us are going to want when we move. You've got the consideration there of, do you bring your own car from the UK or do you buy in Portugal? There's various tax considerations there in terms of importing the car or buying new. But that's, again, all things that are on this tick list. And I'm sure most of you have got your own tick list and you're going through it. But hopefully today may have added or at least answered a few things. Now, all of these things that we talked about, I know you're all going through, but as a brief summary. So leaving the UK, moving and replanting in Portugal, take your time and be patient. And then once you've done the work, relax. But also, if we as professionals can help you with some of this, it's doing the legwork for you. But choose wisely. Make sure anyone you deal with is regulated and their reputation is good and secure. Now, I'll leave this slide up for you because anytime you want to have a discussion with me, it would be absolutely 100% confidential. You can telephone me, you can message me, you can email me. The benefit with email is wherever I am in the world, you know I'll get it. But again, that's something we can handle for you.
Brilliant. Okay, Scott, that was really comprehensive and very, very interesting. And we have got quite a few questions coming. So, but just to say, we will be sending you the presentation, or you can watch it again anyway. So anything you missed, do come back. But then, as Scott says, do contact him directly. We would recommend that, certainly. Okay, so questions. Richard has asked, is it generally easier and cheaper to move to Portugal if you hold an EU passport? So is it worth getting that Irish passport?
If you've got the option to get an Irish passport, I would 100% say yes.
Right. Okay. Some of us do. some of us like me have been thinking about it for a long time and never quite got around to it. But so get on with it. Can't be that hard. Holly has asked, what's considered as work carried out in Portugal? If I'm working remotely in Portugal for a UK company, would I be liable for Portuguese tax?
That would largely depend on where you are paid. That's something, again, I mean, I referenced earlier how we would work with certain professionals. We would actually there put you in touch with a local firm of accountants. They would advise you much more thoroughly, because again, they can look at it from both the UK standpoint and the Portuguese standpoint.
Okay, thank you. Philip has asked, can we keep our UK bank accounts open for the receipt of pensions and rental income?
Absolutely, 100% yes.
Is there any benefit in doing that?
Just in terms of ease, it's
Right.
something that if it's an existing arrangement, there's zero downside to closing them, down,
Okay.
and zero. I mean, the negatives are virtually non-existent.
Okay. Holly has asked, when would someone typically require a wealth management company? I mean, would the value of total asset need to reach a certain amount for it to become worthwhile?
Not normally. I mean, like I said, I've been doing this 32 years. I have some people who are billionaires. I have other clients who may have as little as 45 or 50,000. One of the things I pride myself on is everybody gets the same level of service.
Right. Yeah. Okay. Fantastic. Stephen has asked, is a UK military pension taxed at source, or can he benefit from the 10% tax?
That would be taxed at source.
Right.
Yeah.
Okay. I suppose I had one question, which was, when is a good time to retire to Portugal? Because I know that most of our people are just about on that period of retiring. When would be a good time?
Honestly, I would say no time like the present.
Okay.
Great food, great people, great weather.
But is there? I mean, if I need to be there for 183 days before I start paying tax, is there any benefit in waiting to be taxed? Is there just any point in waiting for that 183 days to have passed that financial year?
Not really, because again, where if your base is the UK, you're paying tax in the UK. Almost the sooner you move, the sooner you can start benefiting from NHR.
Okay. We've still got questions coming in, so I hope you don't mind just holding on for a couple of minutes.
Not a problem at all.
Tim is querying the cost, total costs for moving. He's been told around 10%, but you mentioned 6%. Is that just who the other person who is speaking to is being a bit overcautious? Or would you say that 6% or 10% is closest?
On the property purchase, we would say 6.
Okay.
But that doesn't include things like the cost of moving, the cost of, say, a new car. So that's probably where you're seeing the difference between a 6 and 10% figure.
Okay. Philip has asked, do we need to open a Portuguese account before we apply for our D7 visa?
Ideally, yes. It's not absolutely 100% essential, but the sooner you get the Portuguese account set up, the better.
Okay. Now here's one that I've often wondered myself. If we've already moved to Portugal, would it be better not to take the lump sum pension and take the fund another way? I'm not sure.
In essence, yeah. No, but I understand. I think I understood what you mean. So let's say you've got the pension fund, you've already moved to Portugal, and you decide, well, do we take the pension commencement lump sum? Probably not, because it's not going to be tax-free. Whereas if we roll it all into income, and like the example I gave, potentially over a 10-year period, you could withdraw everything and only pay 10% tax. Now, utopia would have been take the pension commencement lump sum before moving to Portugal, but that's not always possible. And that could be age restricted, or sometimes life just gets in the way.
Mm-hmm. Excellent. Okay, well, I think we'll call it a day there. So thank you very much, Scott.
You're welcome.
Been really interesting. One thing I found from our survey, by the way, we sent out a Your Overseas Home survey, and we asked people, including those who've moved, whether the whole process, financial, everything, was easier than they expected, and 80% said it was easier than they expected. So if you're worried about this stuff, please don't worry. Get the experts on board, like Scott, like Chase, and they can all make it very easy for you, and you can be out there enjoying that sunshine completely painlessly. So thank you again, Scott, and we will. Oh yes, there's a we could, if you could, perhaps put a recommendation on Trustpilot if you found this interesting. That would be really helpful. Thank you. There should be a link coming up there now. So yes, once again, thank you very much, Scott, and thank you very much to our viewers for tuning in, and good luck in your move to Portugal. Bye-bye.
Thank you all.